Hey everybody, it's Josh Dorkin from BiggerPockets.com. I've got another exciting interview with you today with Rob the House Guy, Rob Gillespie from Ohio. On Bigger Pockets, he's Rob the House Guy 1, the number 1, not O-N-E, but the number 1. What's up, Rob? Nice to meet you, man.
Hey, how's it going, Josh?
Not too bad, not too bad. Welcome to our interview series. Why don't you, before we get started, why don't you give yourself a little plug, tell everybody about your website, how to find you, and we'll get going.
All right. Well, I'm Rob the House Guy. I have a couple websites. I have robthehouseguy.com, which is actually what I operate out of for flipping all my properties, my buying and selling. Then I have a blog site, askthehouseguy.com, where I just answer real estate questions, a little bit like Bigger Pockets, but you don't get the volume of knowledgeable users answering these questions. You just get one, just me.
Is that cool? All right, so we got the two websites, and excellent. All right, man. So listen, you've been around Bigger Pockets for a little while. You've been offering some pretty good advice, I think, and so of course I thought it fitting to bring you on here and chat with you a little bit about yourself and what your focus is, and maybe we could learn a thing or two from you. So I guess why don't you start with how you got started. I know you and I were talking before the interview, and maybe you can fill everybody else in about your background and everything else.
Yeah. Well, it was late one night, and I spent thousands of dollars on a course. No, I'm just kidding. No. Ever since I was a little kid, my mom always told me, why don't I buy a two-family house and live at home and rent it out? So I was like, all right, this sounds like a good idea. So the time I'm in 8th grade, I remember sitting in my little fort that we built in my backyard, and I'm telling my buddies I'm going to be a landlord someday.
Was that the two-bedroom house, the fort? That was the first one?
Oh, yeah, that was the first one.
Nice.
Actually, I've had houses that weren't much different than the fort that I was in.
Right.
Yeah, some of my ghetto places. But at any rate, this fort, we're sitting around, we're talking about this, and everyone's making fun of me. They're saying, Rob, you're crazy, you're going to be a landlord, you're going to be a slumlord is what you're going to be. I'm like, well, whatever, that's fine. So nevertheless, so I figured, okay, I still got to get out of school, and I still got to get a job. I'm 37 years old at this point in time. And back in the day when you were graduating high school, you had a couple options. You could either go to college, or you could go get a union job somewhere.
Gotcha.
And, so I got into a union job shop and started a tool and die apprenticeship,
wow.
Which isn't bad. You know, I was making $40-some thousand a year out of school, and, things were going pretty well. And then I started my plan, just like I told my mom I was going to do. I was going to buy a double and live at home and rent it out. So I went out and I bought a double.
Okay.
And that wasn't the best deal in the world. They were asking $79, and I got them down to $76 and thought I sold the thing, and realized that there was no positive cash flow, and it looked like there was on paper.
Gotcha.
And then I kept buying another double. Then I bought 2 houses on one lot and a couple singles. And I don't know, I probably had 7 or 10 houses at the time. And I was a third-year apprentice. And because it was a union shop, I had looked across the shop floor one day, and I saw a guy that was there for 50 years. And I knew exactly how much he was making. He was $1 an hour ahead of me. And I was like, this is amazing. This is all my life's going to be, a $1 an hour more.
Right.
And I just made a decision. I was like, I think I'm just going to do this real estate thing full time.
Nice.
So I went, told my supervisor after I don't know how many years I was there, and said, I'm done. I think I'm going to leave and do my real estate full time. And that's what I did.
And I'm sure they laughed at you and said, good luck. You're.
Oh yeah, you'll be back, and everything else.
All
and
that.
Since then, that shop closed up, and a lot of them are unemployed, and some of the guys have actually come to work for me. So
really, wow. Well, that's pretty cool actually to think that it came full circle, and you did come to help those guys out. So that's great, man. That's a cool story. It's always nice to hear, about folks who are, they've got the dream. And they're working another job, and they know that, if they stick at that job, they're going to be that, 60, 50-year-old guy who's making the dollar more, and you got to make a change. You got to make that decision, right? So that's awesome. What was, so you said from when you were a little kid, you were thinking about it. So that's definitely different than most folks, right? Ambitious, obviously, unusual. I guess the question is, now that you're 37, looking back, is there something that your parents might have put into you that got you into that mindset, or was that something that just kind of happened on its own?
I would say definitely, my mother, the work ethic, and just, you got to work at stuff and stay with it, and, and be frugal. don't live like a rock star. They weren't using the word rock stars back then.
Right,
But,
right.
I think that's definitely, what put it in me.
Okay, okay.
To make something better in my life. I was raised by a single mother, so obviously I wasn't the rich kid in the neighborhood. I was fortunate enough that she worked a couple jobs and kept me in a killer neighborhood. But I was the poor kid in the neighborhood, so I guess that drove me even more to go out and make stuff for myself as an adult.
I got you. Oh, that's great. By the way, pardon the beeping. Somebody's yelling at me on the other end of Skype here. So
Gotcha.
Such is life. No, that's great, man. Well, it's nice to see somebody with that work ethic. I mean that's really important. So now you quit your job. Back to your path, right? You quit your job, and you had picked up a bunch of these properties, and I'm sure by this time you started to cash flow. Had you started to? Was there a plan, or were you just acquiring them as you kind of went along, learning by screwing up basically? And
well, that's a great question, and I'm probably gonna make it sound horrible here on Bigger Pockets, but that was probably a big mistake I had when I left my job right away without a plan. I had no real game plan.
Right.
And I think that's where college might have helped me a little bit, is in strategic planning and taking some business classes, but I didn't have that. And I left, and of course, as many of you know, when you leave your job, even back in the day, it became much more challenging to obtain financing without documentable income. Because at that point in time, even though you have an income coming in on some things, you're taking depreciation, you're writing everything off, and you're showing basically not making anything.
Right.
Because really you're not when you're paying $76,000 for a $79,000 house.
Right.
And I realized very, very quickly that at least in my world at that time, the way I was purchasing rental properties, there was no such thing as positive cash flow. It did not exist.
Gotcha.
And it was a kind of a rude awakening. And I still remember day one of leaving. And, it came Monday morning. I'm like, okay, now what do I do? Do I go look at properties? I go check on my properties. So I rode around with some of my houses and talked to some tenants. And, rent wasn't due for another few weeks. So I really didn't have anything to do. Quickly, I realized I'd better start kicking it in gear. And I wanted to try to unload some of my non-performing assets, the ones that weren't really making me a lot of money. And I realized I couldn't even afford to hire a real estate agent because I was so over-leveraged on these things.
Gotcha.
And this was, back years ago. It wasn't like today when everybody's in that situation.
Right.
I hadn't known them that long, and there really wasn't an upside to them.
Gotcha.
So this is really where it took me to where I am today. And I joined a local RIA. That's the Real Estate Investors Association. And I joined one out of town because I didn't know of one in my own town. So I joined one about an hour away.
Okay.
And I happened to a hard money lender. And a lot of you know what hard money lenders are. And
some people might call them sharks.
Yeah, some might, yes.
But we don't. We love the hard money lenders, right? I mean, they're our friends. We they get a bad rap, I think, a lot of times, particularly from inexperienced folks and outsiders, I guess. But
right.
I digress.
No, they're very good. You know what? There's a time and place for everything.
Right.
So you just got to know how to use them. Like, a great servant, a horrible master.
There you go.
So, anyhow, so this gentleman, he had to take a property back in the Cleveland market. And he's like, Rob, could you go look at this for me and tell me a little bit about it? Tell me what you think it's worth, what you could sell it for. So I went and looked at it, and I asked him what he had to get. And he says, well, I have to get $8,000 out of it, but you can have anything over that you keep. I'm like, all right, fine. So at this time, I didn't even like a contract or anything. I made a couple calls to investors I knew, and I was like, hey, how'd you like to have a house for $10,000? Had a guy jump on it, and I learned how to do an assignment of contract. And I assigned my contract over to this guy and made $2,000. I was like, this is fantastic. Yeah. And to fast forward, I did the one across the street and tried it for another $2,000 and took a note for my $2,000 on this and never got paid. And then I did one and I signed up for $10,000. And I was like,
nice.
Then it was off and running.
That's great. That's great. Hey, Rob, let's take a quick break. We'll be right back, and we're having some sluggish video here, so let's figure this out. Here we go, and we're back with Rob. Sorry about that, Rob. It appears like we've got a bit of a slow connection, but I definitely want to finish this up. I think we've got some good stuff so far, so let's get back at it. You were just telling us about this 10K deal you had done, and you realized you were onto something new here, right? You were onto a new endeavor, so to speak.
Well, I really thought that I had come up with something, and invented Coca-Cola. So I learned how to sell or assign my interest in a contract. So this was back in the day when you could assign an interest even bank-owned properties. So I set up a machine, and I had a guy that was doing nothing but identifying properties for me to buy and lock in contract. I had another guy that was doing nothing but selling my contracts for me. And then I had a title company that actually had an escrow officer that was just dedicated to my stuff. So I really, again, now I thought I had the world by the kahunas again. I was doing pretty well. I was closing 2-3 deals a week and making pretty decent money. And then we're going to go back to this hard money thing now, is where I guess, fell off track again. I got the little greed monster in me, and I started looking at everybody else, saying, well, I'm selling these great deals, and I'm setting up with hard money, and everything's looking great. I want to do some of these too.
Right.
So I started buying some houses, and next thing I know, I blinked. I've got umpteen rehabs going on, and my hard money payments were around the tune of about $15,000 a month. And I was doing nothing but flipping houses to just pay my nut and try to keep things going. So I was basically like a heroin junkie or something.
Yeah.
So that didn't work out real well.
So tell me, because, I mean, you're clearly not the only guy who's done this before. It definitely has happened to a lot of people. The whole over-leveraging situation, I mean, greed is good, right? Gecko told us that, didn't he?
Yeah.
But what,
right.
I mean, aside from the greed factor, I guess, is there anything else that you could say kind of led there? And I guess in looking back again, what could the average, or forget average, but what could investors do to prevent themselves from getting into that position? Is there, what kind of advice would you have?
Okay, that's a fantastic question. And I see this on Bigger Pockets a lot, and I always try to chime in when I see somebody asking about, saying they want to flip 3 or 4 houses a month, or they want to rehab this many. And the best advice I can give is never compare your personal reality to somebody else's social mask. And what I mean is, It looks great when someone owns a bunch of properties and everything else, but unless you're staring at their QuickBooks, you don't know how well they're doing at that. They might be on the verge of bankruptcy.
Right.
So I really, truly believe in go after the quality and not the quantity.
Yeah. Yeah.
If you're able to do the quantity, fantastic, but don't start out just trying to do it.
Absolutely. Yeah, I like to think of it as, it's not a race, right? You're not trying to keep up with the Joneses. And it's hard to do, I think, in this day and age, with the internet and everybody talking about what they're doing and everybody kind of very public with their lives. I'm sure it's different now than it was when you were back at it, but still, I think it's become even harder that you need to stop and look at things like, this is my life. I focus on my life, and that's it. Everybody else, that's great. I'm going to deal with people. I'm going to have partners. I'm going to have lenders. I'm going to do all sorts of stuff. But all I really need to care about, all I need to worry about is what I'm up to and make sure I'm in this level of risk that isn't too high.
Right. Well, to just go back to saying how long I've been doing this, the problem with the internet today is, like you said, everybody is telling their story, and we're all trying to achieve somebody else's goals.
Right.
When I started out, my cell phone, I was still paying by the minute. Not like now, but I'm talking like 75 cents in it, ridiculous amounts.
I remember that.
My fax machine was one of those roll paper faxes, that came out.
Oh, yeah.
And there was no internet. I didn't have email.
Right.
It didn't use it.
Yeah.
So I think that kept my blinders on and kept me focused on what I wanted to do, and I didn't get caught up in the hype of a lot of the gurus out there. I never took the guru. And I would have loved to have something like Bigger Pockets back in the day, just to talk to real people that are really out there doing it, and not just trying to sell a $10,000 course.
Yeah, absolutely, absolutely. Well, no, look, I think this is some interesting, some insightful stuff. I think a lot of people are going to get some real value out of that. Now, where are you today? What's your focus right now? Where are you looking to go tomorrow? Fill us in on kind of the current and future plans of you and your business.
Okay. Well, where I am right now, let's go back up a little bit.
Okay.
In 2006, obviously, I don't know if anyone caught the news or not, but the real estate market kind of took a little bump in the road, and lenders weren't lending like they used to lend. You had to do more than fog and mirror and have a pulse to get a loan. So when that happened, obviously I was into some properties pretty heavy. I didn't want to keep buying at that time because I do hold some rentals as well. So I'd already had a construction company up and running that was taking care of, our own properties. So I decided to take those guys and utilize them on other people's homes. And I did some high-end remodeling and did some work for some other investors and so forth. Not me, because I can't drive a nail straight. The guys did.
Gotcha.
And I did that for a few years. Well, I still flipped some houses on the side, but nowhere near to the volume that I was doing prior to '06. Since then, we went back to not doing work for the public anymore. Now that the market's settled down a little bit, at least in our area, and I kind of know the direction it's going to go. And went back to flipping contracts again. And that's exactly what we're in the middle of now, is locking up real good deals. And I'm doing a little different than what I used to without getting too technical and burning up our entire interview time. Where I used to flip a lot of junk, I'd buy junk and sell junk. Let's say I'd buy something for $10,000 or $15,000 and sell it for $20,000 or $25,000. And those were in the inner city areas, and we were dealing mostly with investors. Now we're locking up the $150,000 house that they owe $150,000 on it, and we're locking that in contract and selling a contract, because there's just a lot more of those, and you're dealing with a better grade of people and better homes. Gotcha.
What I guess I was going to say, what's your criteria now? Obviously, you just explained it, so clearly I'm a little slow here, but so that's now is that where you're going to continue to go? You're going to keep working on those flips, the contract flips, along with building up that portfolio of rental properties.
Correct. Yeah, and the rental property thing, I'm very, very selective on what I want to buy now in rental properties. Anything we buy, I want free and clear. We don't buy anything with mortgages anymore. Just I'm not into the cash flow thing, and this is where real estate investors are a lot like contractors, or a lot like hairdressers for the people that are the women or whatever out there. No matter what your hairdresser says, or who cut your hair last time, the new one cuts your hair says, "Oh my gosh, how they screw it up so bad." Mm-hmm. Or a contractor that walks on the job site where the last guys are like, "Oh, they didn't know what they were doing." And this is probably what I'm going to get off of this interview. But I got to say, I don't believe in positive cash flow. I just truly don't believe in it. I don't believe in leveraging your money and buying a $100,000 house and having a $70,000 mortgage on it and making $200 or $300 a month. In my opinion, it does not exist.
Okay.
And just to be clear, it's not only my opinion. I've spoken to a lot of other investors. I run with a lot of guys on a lot of properties. The one guy I know has 1,200 properties. And when I say 1,200 properties, some of those are multi-units. He's not counting units.
Right.
And he told me he doesn't make any positive cash flow. He says he makes it when he sells the properties back off.
Okay.
So that's just, for what it's worth, that's just my opinion. I'm sure a lot of other interviewers will have different opinions.
I definitely think you're going to spark some debate, and I think it'd be interesting to throw you into one of our 50% rule threads and see what happens to you. You might come out with some holes, but it's it's good. Look, I mean, everybody's got their own strategy, and if you've been able to sustain your business for as long as you have, then clearly you're doing something that works for you. So I'm not going to say that would be what I would advocate, but at the same time, if it's working, then if it ain't broke, I don't know. I can't argue.
Exactly. I shouldn't say never leverage anything. I mean, below 50% loan to value or less, you're getting safer. But when you're talking about having an investment property at 80-90% leverage for a few $100 cash flow, a few $100 cash flow on a property is going to equate to $3,000-4,000 a year. You can have a couple months of vacancy and a blown up furnace, and that's even enough. Mm-hmm. And unless you have deep pockets that you can sustain that property and keep your portfolio going, you're going to end up in foreclosure and selling the thing for 20% of what you paid for it, which is good for the rest of us, but not good for you.
Well, and that's a really good point. I think a lot of new buy and hold guys will pick up properties without realizing how much money you really need. And that does go to that discussion I was just talking about, like a 50% rule discussion, where people don't really realize what all the expenses are, and they don't realize over the long haul, the cost to replace a roof, a furnace burns out, this, that, or the other, vacancy, maintenance. It's it's so easy to say, oh, well, I just picked up a property and, I've got a couple $1,000 on the side just in case something happens. But it might not take a couple thousand. It might be 10 grand. It might be 15, once the crap hits the fan, and you're screwed and you lost your property. So, I think that's a great point.
Well, a great way to just test my theory is go through the 4 rent ads in the local newspaper or on Craigslist or wherever you're looking, and start smiling and dialing, calling landlords, saying, hey, I would love to buy your rental property. And I'd probably say 8 out of 10 of them will say, fantastic, let's get together.
Yeah.
Nobody wants to sell a pot of gold.
Yeah.
I mean, if you have an ATM machine just kicking cash out. Now, on the contrary, now, I'll probably give you an example of the rentals I do condone. Like here in the Cleveland market, now obviously it's different everywhere, so I can't speak for on a national scale. But here, a buddy of mine just picked up a house. It was last year, but he paid $9 for it. I think he put another $9 into it. It was ghetto fabulous, just enough to pass Section 8. Section 8 is where the government pays for the housing. They call it Metro and other areas and so forth. And so he's into the thing altogether at $18,000. And the house is a 7-bedroom, 3-bath home, and he's pulling $1,300 a month on it with no mortgage. Yeah. That's a good rental. Yeah. So.
That's definitely some positive cash flow right there.
Yeah, absolutely.
But and if Section 8 certainly comes with its own issues. I've been there. I've had my fair share of fun Section 8 goodness, but there's definitely some money in it, and a lot of people will focus on that niche, and it works, right? So,
absolutely.
Let me think, man. So we've covered a lot here. In terms of, I guess, kind of looking back at your career as a whole, it's funny. We're guys in our mid-30s, and we're talking about looking back at our career as a whole. Let's write our biographies now, right? Our autobiographies. What would you say your best bit of advice for somebody new, somebody who's getting started, whether it be at buy and hold or contracts, flipping contracts or whatnot? What would be that one bit of advice that if somebody could have told me that, boy, I'd have been so lucky.
Okay, it's kind of a multi-part question there.
Oh, okay.
I think the first bit of advice is don't get caught up with all the hype on you have to have more and more knowledge. The amount of knowledge that you can pick up in just a little $10 book or reading through Bigger Pockets over a weekend is going to give you enough to get started.
I love the plugs, by the way.
You like all the plugs? Yeah. I'm not being paid to get these plugs.
No.
It's the truth.
But you might be my new spokesman.
Yeah, I wish I'd been around back in the day on my dial-up or whatever.
Yeah.
But action is what the key is. Think of a bodybuilder. Think of a guy that's in a gym every day. Do you think he gets up and starts his day saying, I would love to find some books and tapes on how to lift weights. I got to read one more set before I can get in there? Or do you think he gets up, goes for a run, and lifts? And that's why they turn into the great big gigantors that they are.
Right.
And that's what I'm saying to the folks out there is take massive, massive action. The second piece of advice I'd say is be very cautious on what you sign your name on and the amount of liability that you're going to take on to start your new business. Have a good plan in place, and you can truly, truly get started with no cash, no credit, flipping some contracts, and the risk is extremely minimal and the rewards are extremely high. And once you learn the game a little more, then you can start buying some rental properties for some long-term homes and maybe doing some rehab as well.
Gotcha. Well, now I do think that some of that is somewhat at opposition to itself a little bit. The jump into it now is one bit of advice, but you're also saying that people should have a plan. So I think, I think it's important to make a distinction there, right? You definitely want to have some knowledge, right? You definitely want to have a base of knowledge, and you definitely want to be able to take that action. But before you take action, you want to know what you're doing. You want to have some kind of plan to get you going.
Oh, absolutely a plan, but a plan can only take a few hours to put together. I mean, it's not going to take you months on end of going to courses and sitting in boot camps for tens of thousands of dollars a month and all that. No, a plan is, okay, I want to own one free and clear rental by the end of the year. There's your plan. Now, how are you going to do that? Well, I'm going to flip some contracts to do that. Well, how am I going to flip contract? I don't want bigger pockets. I'm going to say, hey, I want to flip a contract. How am I going to do it? 40 to 50 people are going to answer your question on there.
Right.
If for some reason everyone's sleeping that day and nobody's doing it, Google it.
Right.
There's tons of information out there. Most
right.
of these guys give away more information you'll ever need.
Yeah, yeah.
And say, okay, I need to take $20,000 to go buy that one free and clear property, and that's your plan.
Right.
But start taking a step towards it now. I mean, once you make the conscious decision that you want to move forward, write your plan and start moving on it.
Yeah. And let me make one more little distinction there.
Yes.
Personally, I'd say that I want to buy one thing. That's a goal versus a plan. I'd say the plan would be, I'm going to buy that one contract. How am I going to go about buying that contract? Where am I going to find it? How am I going to market for it? How am I going to dump it? That's the plan versus the goal, of course, which is I want to acquire that one property by the end of the year, right? I mean, I'm sure you agree with me on that.
I 100% agree. I'm just trying to talk fast because I know that our interview time is limited.
It is.
Yes, absolutely. You do need to, you can even go on YouTube, and you can probably go, again, on Bigger Pockets, and somebody has a whole real estate plan on there, a blog site or something.
Yeah, and you do talk fast, but we love it. It's great. It's awesome.
Yeah, I talk faster than I type. That's why I get frustrated sometimes. I get on there, I want to answer something, and it takes me so long to get my thoughts out and try to condense them. It's like, you need to put a video spot on there where I can just put a camera and talk and someone can hit play.
That's an idea, man. That's an idea. Well, listen, it's been great talking to you. I think there's been some very interesting nuggets. Again, I think some people are definitely gonna jump on and wanna throw down with you on some of your theories, but I think that's great. The beauty of these mediums is that we can do that, and we can do it in a friendly manner, and out of it, those people who follow and watch it can learn and make their own decisions. Do I agree with Rob? Do I agree with so-and-so? What's the path for me? And, like I said, everybody kind of has their own route. I think it's fantastic that you're so successful and you're doing great, and, I'm very happy to have you on. Why don't you, why don't you give us one more plug? Again, this is Rob Gillespie, in case you missed it in the beginning. Rob the House Guy is his moniker. Rob the House Guy 1 is his username. So it's biggerpockets.com/users/Rob the House Guy 1, number 1. And I guess you'll tell us about your 2 websites again, and we'll get out of here.
Absolutely. If you're buying or selling a property in the Cleveland market, you go to robthehouseguy.com. If you're national and just have some real estate questions or want to yuck it up about real estate, go to askthehouseguy.com. That's my blog site.
That's awesome, man. And Rob can be found on weekends at Bigger Pockets or during the day, any time. All right, man. Well, listen,
that's what we need.
What's that? We broke up a little bit.
You need a mobile app for Bigger Pockets. I can do it off of my iPhone. That's
more pressure, man. You're pressuring me. All right, Rob. It's been a pleasure, man. It's great talking to you, and thanks to everybody for watching.
You as well.
Take care.